Hello, and welcome to our newest episode of the Manufacturing Minute. As an introduction, I am Megan Metter. I'm an audit and assurance partner with Brown Edwards and also our manufacturing and distribution practice leader. Just very briefly, for those of you that may not know, Brown Edwards is a top 100 firm, and we have offices throughout Virginia, Tennessee, and West Virginia. We have a great relationship with many of our complementary service providers, such as Scott Insurance, and we are pleased today to have John Pendleton with us. Hey, John.
Hey, thanks for having me.
No, I'm very thrilled to have you today, and we appreciate you being with us. So can you tell the folks a little bit about yourself and who Scott Insurance is?
Yeah, absolutely. So Scott Insurance is 100% employee owned. We're based out of Lynchburg, Virginia, but we've got 10 offices across the Southeast, and we've got clients that operate in every state and also internationally as well. We provide property and casualty insurance, which is what I do, but we also provide employee benefit consulting and bonding, and we have a practice for personal lines of insurance as well. I've been at Scott for 14 years, the first 10 of which were in our Richmond office, and then about 4 years ago, I moved back to where I grew up here in Roanoke.
Awesome. Well, I just love the fact that Scott Insurance is very similar in size and geographical footprint as Brown Edwards. And I know we work together on a lot of mutual clients. So again, happy to have a conversation today. Let's go ahead and get started if you don't mind. Give us a sense of what, companies, manufacturing maybe in specific, get wrong about insurance generally, and then maybe we can talk about business interruption more in depth.
Yeah, absolutely. So I think not only folks who run companies, CFOs, owners, but I think people in general hate insurance. It feels like a necessary evil, can feel like smoke and mirrors. Everybody knows there's exclusions in insurance, and that can be pretty frustrating. I think most people, because of that frustration, feel like, hey, I want to just deal with this as little as possible. And in many cases, they say, hey, I'll focus on this once a year and get through my insurance renewal. But I've got so much other stuff on my plate that's really all the time I can really give it. I think in my experience, that is a big mistake. And I'd say our best client relationships are really more of an ongoing dialogue rather than dealing with it once a year. And so that can look like a lot of discussions around, hey, we're changing our product. We are moving into a different market. A lot of just business conversations throughout the year. And in our experience, that's the best way to do it, because what you don't want to have happen is assume something and then you have a claim. And because you haven't really been paying attention to it, that claim is excluded, right? And you've been paying all this money for premium, and you're sitting there thinking, gosh, my money, what has my money gone to? And so I just think at its core, the more folks can actually lean into having those discussions throughout the year, the more successful they're going to be in just kind of managing this line item.
No, I don't disagree. We have that same conversations with our clients as well. Accounting and tax, even legal issues, insurance, it can be kind of scary and overwhelming. Sometimes we ask for a lot of information, but folks like you and I, especially on the insurance side, you're looking to protect your folks, right? So, and that's kind of a good segue into business interruption. I mean, we're seeing that a lot for a lot of different reasons. Can you talk to us a little bit about that?
Yeah. So business interruption coverage is extremely important and relevant to manufacturing companies. And so I can start with just a high-level description of what it covers. And so basically, it involves a physical loss to property as the coverage trigger. So the easiest example of this would be, hey, we have a fire at our production facility, and that then causes an interruption to the operation. And business interruption coverage comes into play and covers you in a couple of situations. It can subsidize your lost net income while you're down until you get back up into normal operating conditions. If you want, it can also help cover payroll costs in the interim as well. Some companies say, hey, it's hard to find labor, so we definitely want our limit to cover payroll. Some companies say, hey, look, we're in a market that labor is, something we can find pretty easily. So we actually want our limit to be a little bit lower, because we would just lay folks off temporarily, and then we would get back up to speed. And once we're there, we can easily onboard new employees. So payroll is category number 2. And then it can also cover something called extra expense. So if you think about, any costs that the business incurs as a result of the loss that they, normally would not incur, extra expense is brought to the table to cover those costs. So an example would be, hey, we've got to go rent a new facility temporarily, or we've got to go hire a moving company to move out some equipment to a different location. These are all costs that can be covered as in that third category, extra expense cover. That is just the kind of high level, easy example of some, things it can cover and description of the coverage itself.
And maybe it would be helpful too to just discuss what business interruption in itself means.
Yeah.
I think automatically of like those kind of natural disasters, a fire, for us recently in Southwest Virginia, the Hurricane Helene that came through not too long ago.
Yeah.
But could it also be cyber? I mean, kind of talk about a little bit what a business interruption event could be.
Yeah, great question. And so it really comes down to physical loss to property. So I'll tell you about cyber in a moment, but ultimately those natural disasters are probably the best example. Unfortunately, I've been through a business interruption claim with a client that had a direct hit from a tornado, believe it or not. And so there's a great example of, obviously there was a physical impact to property there. And so that is the trigger for that coverage. And so that can initiate this BI or business interruption coverage. On the cyber front, you're exactly right. That can also be a interruption. Let's say we have a ransomware claim, right? Our system's locked down and they say, hey, we're not going to release your system unless you pay us X amount of dollars. Cyber insurance actually includes business interruption. So the way to think about it is there's kind of 2 different coverages or 2 different forms of BI. And so you have an electronic form, which is really more the cyber insurance. And then you have this physical loss to property BI, which really falls under your traditional property insurance coverage.
Well, that's really helpful because, I still hear of our clients having cyber incidents all the time. I still hear of also the physical property damage incidents as well, such as the hurricane, frozen pipes. We had a cold December not too long ago. Had a client that, had a long-term business interruption period because of that flood that occurred. So, just a moment ago, you talked to us about limits.
Mm-hmm.
If I'm a CFO of a manufacturing company, what do I know how do I know what is the right level for me? And can you help talk, clients through that process?
Yeah, that's critical. So good question. I think this is an exact example where it can be frustrating and time consuming to deal with insurance, but this is time well spent. And so what you would want to do is work your way up to that limit through something called a business income worksheet. And this is something that we use with clients that effectively walks you through, hey, what are our cost of goods sold? What does our payroll look like? What is some of these financial items that you go through line by line? And then ultimately, the way the worksheet works is it kind of spits out a number. Now, that I would say, this topic is part art, part science, because the science part is going through that process. But once the number is kind of spit out, you can kind of make I would say the art part of it is a risk management judgment around, hey, do we want a little more? Do we want a little less? There's a way to kind of make those tweaks after you go through that process. And that's the art end. What I would say, though, is you need to make sure you're doing this business income worksheet on a regular basis. Now, I've found clients that never do it. Well, I wouldn't say clients. I've seen companies that never do it. Sometimes we are pretty hardcore about getting our clients to do it. And I've seen folks that do it every couple years. I've seen prospective clients that handle it in a couple different ways, even though it's a pain. I would say for manufacturing in particular, that's something I would absolutely do every year, even though it's a pain.
Well, things change all the time, right?
Right.
Especially with everything going on in the manufacturing world. Tariffs are impacting costs. Hopefully, they're also impacting sales price.
Mhm.
Things like that will change, I assume, what that net income bottom line number looks like,
Yep.
which would, also then affect the bottom line coverage that you would want to make sure that you're paying attention to.
Yeah, that's a great point, particularly over the last couple years. You're exactly right.
That's interesting. So, what can a business owner do before a claim occurs to put them in the best position possible in the event that something does happen?
Yeah, so that I think the business income worksheet is where a lot of people stop. And so that is important. But I'd say the best practice is something we've done with other clients when they're interested in going this route is helping them build a disaster recovery plan. And I would say a plan is great, but it's not worth much if you don't work the plan and practice the plan. And so what I mean by a disaster recovery plan is, hey, let's say we have that fire or we have that tornado. What do we do the next day? And so like any emergency situation, it's one thing to think about it intellectually. It's another thing to experience it, right? And when you're emotional and, if you're a business owner, this thing you've worked your entire life on building, well, now it's in shambles, right? So your brain just kind of shuts down. And it is helpful to have a document or documents that say, okay, break the glass, pull it out. What do we do next?
Right.
And so, for example, I'm working with a client right now that's a manufacturer, and we're having some meetings about helping them tweak the plan that they have. And so there's some core critical things that you want to work through when you're developing that plan. So first of all, you want to decide who's going to be on the crisis management team and who's going to be the leader. You need somebody in charge. What I would say is when you're building that team, you want to have somebody from finance. You want to have somebody from HR. You want to have somebody in sales because they're contacting customers, and you want to just kind of have a loose group like that. If you're a manufacturer who has multiple locations, our advice would be make sure you have at least one point of contact who is going to serve as the lead for that facility. And that'll be important here in a second. The questions you want to work through proactively are, let's get a list of our suppliers. Let's get a list of our major products, and let's get a list of our equipment and what the lead time is on that equipment. And when we're talking to suppliers and vendors, hey, how quickly can you send us new inventory, right? Because the clock starts on these business income policies, and you're really trying to get back into business as fast as possible because you're eating up that limit, right?
Right.
And so having worked through those things, particularly the lead time on the equipment, because I think people underestimate if they've got a press brake, for example, or they've got a laser cutter in that manufacturing facility, that's not something you can just go down to Walmart and pull one of those off the shelves, right?
Absolutely not.
That's a big CapEx expenditure, and that stuff takes time. So, the folks that sometimes go an extra step and kind of pre-negotiate with that supplier or equipment vendor and have that conversation, they're likely going to turn out in the best position possible. The other critical part of this is, what's our alternative production strategy, right? So are we able, if we have this loss at our main location, are the other locations able to pick up the slack and account for the production of our, if we got 5 facilities, our main one goes down, can the other 4 supplement that and get us back to where we would be more quickly? If the answer to that is no, then it's a conversation of what can we do externally from a contract manufacturing perspective to partner with somebody outside of the company to come in and temporarily supplement our efforts. These are all critical questions or critical considerations. The other big one is when these claims happen, you're going to want to bring in somebody to remove all the debris, for example. You're going to need to bring in somebody to ultimately, you're going to have to make a lot of purchases along the way. So there's going to be a lot of chaos. and a lot of parties. And so our recommendation is always, hey, where are we going to store all this communication? And ideally, it's in a share file, a SharePoint, something like that, where receipts can be loaded up to, loaded into. The adjuster from the insurance company who is going to be adjusting the claim is going to want to look at financial statements from your most recent 2 years, typically. So let's load those in there. So basically, all of your response, ideally, is being tracked in one secure place. Because again, you're just trying to do your best to kind of control and keep things as organized as possible in a situation, admittedly, by its just nature is going to be a little, fluid, which is an understatement.
Yes, as a part of our audit work too, John, we ask clients if they have a formal disaster recovery plan. And, we use the word formal, somewhat, with shades of gray.
Yeah.
But, as it relates to financial data too, is it being backed up? In the case that, a server were to catch fire, God
Right.
forbid, something like that. So all of that's really important.
Yeah. And there's that famous quote, we don't rise to the level of our goals, we fall to the level of our systems, right? And so it's great to have this shiny, color-coded 15-page plan, but if you don't have a regular rhythm of practicing that plan and making it a system, you're just not going to succeed as well. It's better than not having a plan, but ultimately it's like any other habit, right? Ideally, you're sitting down and say, hey, once a year, you're meeting with that crisis management team and say, okay, guys, we're going to run a tabletop exercise, right?
Which hopefully you never have to actually use, but you're ready in case you do.
Yeah, exactly. Exactly.
John, our listeners usually relate to some real world experience that you've had. Could you, somehow put together some kind of history that you've had where business interruption insurance has really been critical for one of your clients?
Yeah. So I'll just go back to that example with the tornado. So we had a client that ultimately was hit directly by a tornado in their main facility. Interestingly, their headquarters is actually attached to that. So, and it looked like something out of a movie. And so one of the things that we did immediately is made sure that when we turned in the claim, we didn't just turn it into a normal adjuster. We went ahead, the carrier, I'll keep the name out of it, but we went up the reporting chain and said, hey, we need a catastrophic adjuster. And we flew in someone from the insurance company out of the Midwest because the local everyday adjuster, I'm sure they do okay, but this other person that we brought in, like, this is what he does. And so he travels the country responding to these things. And so that was key to the response. And then what we tried to do is just honestly, I think, where a lot of our competitors fall short is saying, oh, just turn in the claim and then we back out of the process. In a situation like this, that is unacceptable. And so our team was there the very next day, going on site, and then just trying to play, quarterback and trying to organize. I was on the phone with all sorts of different vendors because my client was honestly shell-shocked, understandably. And so they've never been through this before. This was catastrophic. And so understandably, they were very emotional and just kind of stunned. And so we made sure to have a huddle meeting pretty soon with all the parties involved and said, okay, you're going to do this, you're going to do that, we'll do this, we'll do that. And we did that every day for quite a long time. And it becomes, it was emotional for us too. It can be overwhelming, but I think that is where, relationships are really, strong or built to be even stronger. And so that claim ended up being over $3 million. And honestly, to this client's credit, they were able to get really creative and back up into business, not the full way, not 100%, but way faster than, it originally looked like they'd be able to do. And that's a compliment to them and being super resilient and go-getters and fighters. And so when those things happen, I think these business income situations, thankfully, are rare, but when they happen, they're severe. And So that was just something I don't think I'll ever forget. We've been through these claims on other people as well. But if you're not prepared for it, it can be a rough experience.
Yeah, nobody ever wants to have to use insurance, but that's a cost of doing business. And
Yeah.
especially to be able to pay your employees and make sure that their families are taken care of in the, tragic event something happens. No, we appreciate sharing that example. And I'm glad that your client was able to recover well.
Yeah. And I would say that, we have a risk management consulting group and we work with our clients from a lot of different angles through that group. And so this other client I'm going through this process with now, we're meeting with their team and again, trying to before something happens, walk through this disaster recovery process. And it's just, you want to control your controllables and you do the best you can. But again, going back to my theme of, you got to have an ongoing dialogue with your broker partner, in my opinion.
No, absolutely. John, this conversation has been enlightening and we definitely appreciate your insight. So, John, if any of our listeners wanted to reach out to you today, what would be the best way to do that?
Yeah, happy to do that. My email would be best. It is jpendleton@scottins.com. I'm happy to have any conversations that, are helpful, objective, second opinion advice, that sort of thing.
No, we appreciate that, John, and appreciate your time today. Sometimes these topics aren't the funnest to talk about, but our job here is to inform, our manufacturing clients, give them options, opportunities to continue the discussion and just be aware of what's in front of them. So we appreciate the conversation
Yeah,
today.
absolutely.
Thank you.